Good morning. I'm taking a look at cable, sterling to those who have never worked in the Forex market. And we are getting a little bit battered in here through just sterling being weaker across not only the dollar, but most of the other currencies that I look at as well. I look at Euro sterling, sterling CAD, sterling Aussie, sterling Swiss, sterling Kiwi. The list is endless, and sterling yen, and none of them are looking very positive at all. If you look at what sterling is doing at the moment, we are below that magical 130 area, and we seem to be heading towards that 55-day moving average, and that's coming in at 28.91. Now, as you can see, that just underneath that, you've got the 50% fib level that I've taken from just the most basic recent move up. So I've gone from that one up to 134.86, and you can see that 128.69 is the 50% fib. Now you can see also there's a little bit of congestion here. If we go across to this high here, you can see that that's 128.13. If I look towards my trend line, that's coming in at 128.18. So all in all, the market is seemingly on a downward spiral. And I think when you had this break up here on the 1st of September, when we did get to highs of 134, nearly 135.80, nearly 135, we got to 134.83. So, but we closed lower. And I think that's the thing that we're actually looking at. That was the key, that the market wasn't going to go any higher. Now, if I take a look at the weekly chart, you can see that our indicators are really pointing a lot lower now. Okay, we have done the turn. We did see the divergence here in the market. We saw new highs made, but not new highs made in the indicators. The RSI is pointing lower on the weekly chart. We failed to get to here, which was the 135.15 area. So all in all, it is not looking brilliant for sterling. Now the 200-week moving average is coming in at 129.31. You can see that we are right on that level now, with the market currently just dipping below that at 129.28. Now this moving average is used by a whole rake of institutions and hedge funds and anybody else really that is looking at the longer term view of the market, and you can't help but look at that and say, if that breaks and we get a close below it, then unfortunately sterling is going to come round to the 126.5 area, more than likely the 125. But that's not what we're into today. This was just a glimpse of what the longer term picture was. So at the moment, I do not see any reason to buy sterling at all. I think if we get a pullback towards the 130.20 area, then there could be a reason to go in and sell it. Watch that 200-week moving average, okay? As I say, we are sitting on that right at this moment, and to lose that would send an extremely negative signal to the market. Are we going to get back up and wipe out the declines of yesterday? Frankly, it's not looking like we can. If you're not wishing to trade sterling against the dollar, then go out and have a look at sterling against other currencies. There may well be a point or a chart level where we can look to either buy or sell if market sentiment dictates. At the moment, the market sentiment is dictating this is going lower. Your daily pivot is at 130.45. Your weekly pivot is way above there at 133.81. With the monthly a respectable 132.47. I know we've just started, and I know that the market is getting all excited about where we go for the rest of this last and final quarter. I do think though that the important thing is to just sit tight, see what it does here at current levels, and you know there is a big following of this 200-week moving average, and if we can hold it after yesterday's action and importantly today's action, then we do have a chance of seeing a little bit of a correction. Don't ignore the weekly indicators because they have most definitely turned negative. The monthly indicators, well, they're too long really for us to too long term for us to really get an idea, but at the moment they are not doing much. They're just still pointing higher but at extreme overbought levels. Our monthly RSI has turned lower, but again, you don't want to take too much notice of these longer term charts because they don't really help us in our day-to-day trading, but they do help us a lot in the interpretation of what the market is actually thinking. I hope this has been helpful, and I will catch you all tomorrow.